In this video, I'm going to tell you a little bit about my swing trading strategy. Now, you might be like, Cami Capital swing trading, don't you live trade every day? Aren't you a day trader? And yes, that is correct. I also, this year especially, am putting quite a bit of attention towards swing trading as well. Last week, I made 16% off a swing trade. I'll run through my swing trading strategy shortly. But yeah, 16% last week from a swing trade position on the NASDAQ. So I both actively day trade the NASDAQ and I am also at the same time swing trading it at the same time. And now I found this has kind of benefited me in another way as well, as it's helped me to keep my day trades in line with the overall direction of price. Obviously, with an active swing trade position on, I'm very aware of where I'm looking for price to move towards. Therefore, that helps assist my day trading. And on top of that, I get to make some decent money. You know, a lot of us gravitate towards day trading because we don't have the patience to sit around and wait for a setup to form, wait for a setup to play out, etc. But if you can do both, maximizing your gains in the market while also giving yourself even more learning experience by exposing yourself to the market more, you're both day trading, swing trading, or even if maybe you work a full-time job and you aren't able to really day trade that much, swing trading can be a good thing to do. I mean, when I used to work 9 to 5, I put a lot of effort into swing trading, kind of forgot about it once I became self-employed because then I had all the time in the world to day trade. But yeah, bringing it back now so far has been a fantastic result. So first of all, just showing you here on the charts, execution. With my swing trades, typically I'm risking between 3 and 4%. So I had 4% risk on here and I took off the first piece of my position there at this bearish fair value gap. And then the second lot of my position, once we failed to push through the bearish fair value gap on the upper end here, and I had one more position which I entered based off a 4-hour gap, which I also closed off today since we failed to break the highest point of last week on Friday. So all out coming up with just under 16% on the week from a 4% trade. Now that is on my personal account because you cannot swing trade with the futures prop firms, unfortunately, but I also wouldn't be risking 4% per trade on a prop firm account anyway. That's insane. But on the personal funds, different story, no problem at all. So yeah, really nice return last week. I'll break down now. We'll just jump back over. This is a CFD chart. It's the one and only time I use CFDs is for swing trading because it allows me to manage risk more accurately. But we'll jump over to the futures chart. And I'll just break down basically the way I frame my swing trades and what I'm looking for. So first of all, let's just imagine it was back the day before I entered my swing trade. And what I'm doing, if you haven't watched this video already on my channel, it's the IPDA video. I will link that in the description below if you haven't seen it. But I use the IPDA data ranges. So I go from current day back 20 days, so 20 bars. Okay, so I'm looking at a 20-day look back from where we currently are on the current day. 20 days back, and then on this range of price from the highest point to the lowest point, I'm pulling the premium and discount range across from high to low. By the way, that's using the GAN box tool, GAN box, and here are the settings. You want to pause and copy that for premium and discount zones. Red is obviously premium, green is discount, and then I'm looking at the overall trend of price, right? I'm looking at, okay, we're in a bullish trend. I'm not going to want to fight the trend. My whole thing is trade with the trend until proven otherwise. And so far, I haven't seen anything that constitutes a proper bearish shift in market structure. So what I was doing here was like, all right, so I'm not looking to short at any time soon. I'm wanting to look to long. So I've got this last 20 days drawn out. I've got the premium discount range. And then within this premium discount range, because I'm looking to go long, I'm looking at then all the zones we have down here. Okay, so we have in the discount zone, we have daily bullish fair value gap here. We have another daily bullish fair value gap here. Okay, so we got two daily bullish fair value gaps. And of course, we have a daily bullish order block right there as well. Along with, I know I'm throwing a lot of things at you, but this area here is also part of this overall mitigation zone. So I've got all of this in mind, right? Looking at all these zones in discount, and not only that, there's one added extra confluence from the current high to the low of that last 20-day range. We're also approaching the ICT optimal trade entry zone. So Because of the optimal trade entry, I'm waiting for price to come down to this zone where these discount fair value gaps are, the mitigation block and the order block are all residing within the OTE. So no trade here yet. Now what I'm doing, going into the next day, what I'm doing is I'm not trading solely based off the daily chart, right? What I want to do from here is drop down to the 4-hour chart and start to hunt any sort of reaction from that zone. So as price approaches my zone of interest, we're getting into that zone of interest. Now that we're in my zone of interest, I'm dropping down to the hourly chart to look for confirmation. And confirmation is the same as what I'm looking for when I'm trading intraday as well. So I'm looking for that displacement to the upside, signaling a potential for price to reverse at this point. So give it its time. Nothing really happens. It digs down a little deeper, then we get a big downward sweep. And then up we go. There we are now. That dug right into that daily bullish fair value gap, which is this box here. Dug right into that daily bullish fair value gap. Bodies respected it. Nice long rejection wick and then a pump to the upside. So that is that displacement I'm looking for, right? We get that displacement to the upside and then just like always, I'm looking for that fair value gap entry for my long trade. There we are. There's that 1 hour fair value gap. Basically for my swing trades, analysis starts on the daily, then goes to the 4-hour chart to wait for price to trade down into my zone. As we get closer, I drop to the 1 hour chart to look for my entry. Okay, so daily, 4 hour, 1 hour to look for the entry. So I've got that 1 hour fair value gap marked out. Price taps into it. And that's, as you can see on the CFD chart, that is where I got my entry in that 1 hour fair value gap. Entry is in that 1 hour fair value gap. I'm risking 4%, putting my stop loss at the swing low. If we're jumping back over to the futures chart, so we have the most accurate data here. What I'm doing, if I jump out, just clear the drawings for a second. Remember the entry is down here, 4% risk. What I'm targeting are opposing PD arrays and liquidity. So that's what ICT teaches is 2 things price looks for is firstly, it looks for inefficiencies. Secondly, it looks for liquidity, which is your swing points, relative equal highs, lows, etc. So inefficiencies and liquidity. So I'm looking, all right, I've got my entry in. There is an inefficiency here, but with my bullish bias, let's just remove these just to keep things nice and clear. With my bullish bias, this inefficiency here, I expect to be blasted through. It's only sitting right by the equilibrium of the current price range. So I would expect price to seek a deeper premium before coming back down if price was actually to be bearish. So from my entry point, instead of targeting this inefficiency first, I'm targeting the inefficiency that's actually higher up in the premium range. So my first take profit came off there as price tapped into this zone just to be safe, secure some profits. And then I had another runner on, which I took off, as you saw, at the upper fair value gap. And then during the week, as I saw us continuing to pump higher, this is where I added my extra position to see if we could pump up towards the all-time highs. At the end of the week, towards the all-time highs. But at the end of the week, as I saw we failed to make that push higher, I closed the entire position. And again, there is the proof. So closed off the entire position at that point, making a nice 15.8% return in 1 week. And that's all alongside the day trading I was doing the entire time, which was passing another top step combine and having a stellar week. So you can really capitalize on swing trading like this. And the best thing is when you have a move like this that is very strongly bullish, you can get a move in a zone like this, like my entry down here from that fair value gap. You can get in a move, and after taking majority of profit off the table, you can literally leave a runner on for the rest of the year. Imagine the start of the year, right? Imagine this is the low of the year. Obviously best case scenario, but imagine that was the low of the year and I hold one runner on, just trailing my stop. Not too close, but trailing it. And imagine the returns if you can hold a trade for half a year, a whole year. If the year's on a bullish trend and you're holding down here, imagine the return just doing that and slowly accumulating more positions as time goes on. So don't dismiss swing trading as boring or something you shouldn't do just because you're day trading. Now, obviously not financial advice. I'm not advocating you do anything. Trading is risky business. Most people will lose money. But if you're a consistent day trader and you know how to read price, you've been profitable. This is why I'm also adding swing trading into the mix and placing quite a heavy importance on it. That was my biggest return last week, was from swing trading, not from the day trading. And that was with real money on my actual personal funds. So you can imagine 16% 1 week. You're looking at some decent numbers. And obviously not every week's going to be a winner, But with my stop loss at 4% and trading based on the high time frame order flow, the risk to reward ratio there is just too good for me to pass up. So I wanted to share that with you guys. Let me know if you want more swing trading content alongside the usual. Comment in the video below, like the video, subscribe if you haven't already, and I'll catch the rest of you on stream on Tuesday. Happy trading, be safe.